to branch out our conversation a little bit from our AI focus. This is the Schwab Big Picture team. Mike Townsend, the Managing Director of Legislative and Regulatory Affairs, and Cooper Howard's Director and Fixed Income Strategist at the Schwab Center for Financial Research. Okay, but of course, let's talk some inflation first here. It's the main focus this week. And we are expecting to see the number rise a little bit, Cooper. How much? What do you think is in the realm of possibility here?
Yeah, so we're expected to see a little bit of an uptick in the CPI number. So the core number is supposed to come in a little bit above 4%, and then the headline number should be about 3.6%. That's right now what the street is estimating. So what I think is going to be interesting is looking under the hood and kind of seeing what are the underlying components doing, and then is that going to change Fed policy? So our view right now is that it's unlikely we're going to get a rate hike this month. Now there is a window open potentially for a rate hike next month, depending on where inflation comes in. I think that you'd have to see a lot of surprises to the negative, meaning that inflation really reverses trend and the unemployment market really shows a continued tightness. So I think that that's kind of what would be looking forward to. But there is a lot of data coming out this week, so it could be market moving a little bit.
What else do you think is going to be important here this week? I mean, obviously CPI, crucial, but a few other numbers here and there. I mean, anything that can compete with that as a catalyst?
You know, I think obviously CPI is going to be the big important one because this Fed has been laser focused on bringing inflation down. So anything inflation focused is going to get an outsized amount of scrutiny because of the Fed's reaction function. But also keep in mind that we have the employment numbers coming out also on Thursday. So we should see some numbers there. And if it shows overall that the market, the employment picture is still relatively tight, there are starting to be some cracks that were showing up. But if it does show that it is relatively a tight labor market, then I think that that could be a potential market mover as well.
If inflation numbers start to come in hot, Mike, does that put any pressure on the administration to start talking about it again? Because, a year ago, it was certainly part of President Biden's repertoire, talking about CPI and inflation and the importance to get it down, and that the Fed was working on it. There was a lot of involvement, but unless I'm missing something, I haven't really heard so much about that from the White House lately.
That's right, Oliver. The administration is trying to push forward with its agenda on some of the things that it's already passed. And, they've had a real difficult time explaining to the average voter what they've done over the last year and how it's helped on inflation, how it's helped on jobs and that sort of thing. So I think we're going to see a concerted effort by this White House over the next couple of months to try to focus on those things, try to break it down for the voters so that they can understand what this administration is sort of selling as it heads into an election year in 2024. So I think that's going to be a big priority for the fall.
I like the way you put that. For them, they would really like to be able to take a victory lap, if we get somewhere where that's appropriate. I guess, what is that? If the Fed says they got to get down to 2%, does that mean that they can't take a victory lap till 2%? They might have to put a little pressure on for maybe some extra efforts, maybe another hike or so if prices are still too high?
Yeah, well, we'll have to see. I think all eyes are on the Fed, as Cooper said, and the chairman has said that there may be another hike in the offing sometime before the end of the year. So certainly think that's what everyone here is watching for. But there's a lot of data that still has to come in, and the White House is going to try to sell that data in the most positive way possible. Yeah,
the commentary from Fed officials, which has been pretty light, but there were a few after Jackson Hole, seemingly didn't really take sides on the matter, mostly erring to the same message that Powell gave us at Jackson Hole, which kind of rode the fence a bit. Now we're in the quiet period. So I guess that, to your point, Cooper, locks in no move for September, but maybe November and onwards, because we're not going to hear anything from anybody for almost a week?
Yeah, so we do have the quiet period right now. Last week, we did hear from quite a few Fed officials, but I would be very shocked if we get a rate hike this month. And I think the market would also be very shocked if we get a rate hike this month. And that's kind of been the storyline that we've seen play out for quite some time. The probabilities of a Fed rate hike in this month have only been about 6%, 7%. So ticking down into the single digits, depending on what day you look. So I think that's it'd be a big shock if we get one.
For sure. Hey, any other shock, Mike? Real fast, got about a minute here on the potential for government shutdown. I know that that's always on your calendar.
Yeah, the circus is back in town now this week, Oliver, with both the House and Senate back in session. We're on like a 19-day sprint to try to come up with an agreement for the end of September. The interesting thing that's maybe hanging things up is Ukraine aid. There's an effort to try to get a temporary extension of government funding through perhaps mid-November. But there's a brewing controversy over whether more aid to Ukraine should be included in that temporary agreement. I think that's a potential sticking point. Wouldn't be surprised if we got right down to the edge of this month and then maybe kick the can down the road to November. But I think the chance for a government shutdown is still very, very significant, whether it's here at the end of the month or a little later in the fall. Important for investors to remember, though, typically government shutdowns have not been big negative market movers. In fact, we've gone 5 straight government shutdowns in which the S&P 500 has risen during the shutdown. So not a big one for the markets.
Gridlock is good, right? That's the saying there for that one? Okay. Thanks. Love it. That's a good stat. That's a pretty amazing stat. Government not functioning, stocks go up. Hey, well, if the government doesn't function, can you hike? Or I guess you can still hike. All right, appreciate it, guys. We got to jump. Bells ringing right now. Thanks, Mike Townsend and Cooper Howard.